CEO confidence improving in the first quarter as executives turn more optimistic on the state of the economy. That's according to the newest data from the Measure of CEO Confidence survey. And joining us right now to talk about it is Roger Ferguson. He is vice chairman of the Business Council, trustee of the Conference Board, and former Fed vice chair. Roger, these results are really interesting. I think the reading was just above 53. But the key here is it's the first time since the first quarter of 2022 that the reading is above 50. Above 50 indicates that there were more positive responses than negative responses. So what happened? What are CEOs finally starting to feel?
I think CEOs are finally starting to feel a couple of things. One is sort of the general momentum in the economy that is borne out by the macro statistics. Secondly, I would say the issues around supply chain continue to improve. And the third is there's been this thing going on in some parts of the economy called, destocking, where a lot of companies built up a huge amount of inventory, close to the consumer. That seems to be behind us. And so I think CEOs are feeling just a bit more confident that they'll be able to sell their goods and services as well.
A bit more confident, but you don't sound like it's an overwhelming vote of confidence.
It's not an overwhelming vote of confidence, as you point out. Anything above 50 is thought to be positive. This was roughly 53. To give some context, the high when things were really rocky and rolling was about 82. And so they've moved from negative to slightly positive. The other point I would make is there's still some discussion around labor markets, but that's becoming much more nuanced, where wages are still expected to rise around 3%. But for the first time, we're also seeing a decrease in this thing that we call labor hoarding. So about 23% of CEOs think that they might reduce their labor force over the next 12 months. That's also a notable move from where it was before.
I mean, that's really interesting just from the perspective of labor hoarding. We hear headline after headline about layoffs, and it does make people wonder about the jobs market, even though we continue to get these really strong markets. You think that that is really just a result of letting go of some of the jobs they've been hoarding over the COVID pandemic and beyond?
I think that's right. I think the pendulum in labor markets has swung from ultra tight, employees having the upper hand, trying as employers try to get people back into the labor market. And now I think it's a much more balanced story. You're reading more stories around employers saying, I may let some people go, maybe I will shut down some of these open recs. So I think the labor market is moving, more in balance, and I think you see that with more employers thinking we'll lay off some people while still also increasing wages. So the labor market is, moving definitely back into balance between employer and employee.
Guys, can we bring back up the chart that just shows the CEO confidence measure over time? Roger, what I want to point out is you mentioned that the high, the all-time high, was something like 82 or maybe just north of that. That happened right before the COVID pandemic hit. And I guess that makes you wonder how useful some of these measures are in predicting things to come. Was that an anomaly because this was a one-off situation and not something they could read in their orders? Or is this not always the most useful measure?
No, look, it has been highly useful. When it gets below 50, generally speaking, it is signaling a slowdown. In fact, often it is signaling some sort of recession. I think that 82 shows how surprising the COVID outbreak was and how little people really understood of the economic implications. And so I think there's a lot of learning that has occurred since that time. But I take this 53 as being consistent with things continuing to get better, and it's consistent with the consumer survey, which also is at a 2-year high now.
The only problem with that is that it's been below 50 since the first quarter of 2022. We didn't see a recession. We didn't see the downturn that would normally signal either. And if we're improving at this point, are we not getting to are we not looking at a recession on the horizon?
Well, look, I think many forecasters, as you know, are pulling back from the recession calls. That's also true at the Conference Board. Look, my view about the recession question is it depends very much on the Fed engineering this thing that it's trying to do, which is the soft landing. There's a lot of good news that's come in. The economy continues to be robust, seems to be handling these higher interest rates quite well. Yet we know, the Fed also is clear that it's going to delay its cuts, maybe more than the market thought. And so recession concerns have certainly receded. I would certainly say until the Fed gets the soft landing, there's still a possibility that we'll have, a mildish kind of recession. I don't think it's the likely outcome, but I certainly would not reject it completely as a possible outcome.